All right, welcome. Can everybody hear me? All right. Hey, Kevin. Hey, Roman. All right, let's get this thing cranked up. Hold on just 1 second. Okay, cool. All right, so welcome to Trading Coaches Playbook for this Friday, August 15th. And yes, it is. Let's try that. There we go. Thanks, Andrew. All right, so start as usual. Hey, Brenda, with our old disclaimer. This is all about education, so nothing should ever be seen as advice or recommendation. And since it is about education, any trades we talk about should always be considered as non-funded. Of course, trading involves risk, so we want to try and limit that as much as we possibly can. And not to be forgotten, Freedom Management Partners personnel are not subject to trading restrictions. So, what's on the calendar? We got Inner Circle check in on Mondays as usual at 7 o'clock. Next Wednesday, the 20th, we've got our monthly at 8. Then, of course, we got Mastermind Group on Tuesdays at 8 per usual. And then next Thursday, the 21st at 8 p.m., we've got the next Trading You. And then the week after that, we've got the next Monster Market Movers with Rob. 27th is Wednesday. Of course, our free stuff, we got Power Hour on Mondays. We got this Trading Coaches Playbook on Fridays. Of course, our greatest hits, Pop, E-Mini Think Tank, and Cover Call Explorer. So we got E-Mini Think Tank cranking back up this week. Got Pop. Rob will be back from vacation, so we'll crank that back up next week. And apologies to all you Cover Call Explorer lovers out there. I was a little late yesterday. Um, lots of water in Tennessee, especially in Chattanooga, and I've lost power 3 times in the last 2 days. Luckily, not for a extended period of time. Last night, I think, was probably 3.5 hours, which was the longest so far. So lots of big trees in my area, and all this water is causing them to go, I give up. I'm out. So anyway, we've got on our follow us page here, we've got all the social media platforms with all the cool free stuff. Not to be forgotten, the newest of the bunch, the Trading Post. Great way to start the morning. Let's see here. All right, so we'll start as we usually do with a little review of the SPX and the VIX. So let's take a look at Omega charts with my Rob-like chart of the SPX. So here's kind of a bigger view. We'll shrink this in so we can kind of see what we're, looking at. Don't have the update for today, but of course we had our all-time high, new all-time high on Wednesday, and we kind of tried to get up there yesterday, didn't quite make it. You know, we got our run up with our fib, we got our pause, a little step down, then back up and a pause and a run up and a pause, a run up and a step down. So we're kind of easing our way up, which is better than that. Usually the big spike, the rocket ship comes tumbling down really fast. So those are not usually good moves. So this could be something that could be sustained, especially once we get our rate cut in September, which I think is already starting to get baked into this one because it's all but a done deal. I think, actually, I haven't checked lately. I want to say the last time I looked, the percentage was like 95% or something crazy. Let's take a look. And this is where I go look. And refresh that. So yeah, 90.8% for a quarter point cut. We do not see any half point cuts in here. What the cool thing about this is you go out further, you start to see multiple choices because obviously different things can happen according to what happened last week, which they don't, the last session, which they don't know at this point. So yeah, you see the start to get a little wonky, but everybody's been expecting this for months now, so we'll see if they give us what we expect, right? Don't always get it, but certainly expect it. There you go, 93. Let's see. And then we've got, so I mean, this is likely to continue, but you just don't ever know, right? Especially when you start bumping your head on those all-time highs. Sometimes it gets a little stubborn to break through that all-time high, and that's a lot of where we see some of these little sideways moves where it's trying to break through and then it finally breaks through, and then it goes sideways and it tries. Yeah. Hey, Brandon. Yeah. Brandon said I wouldn't be surprised with Powell holding rates with extremely high PPI number. I noticed that yesterday and I was like, hmm. And of course, people are talking about CPI, but most of what I call him Jerry. He's my buddy, Jerome Powell. What Jerry looks at is PCE usually, which is not great either. So yeah, there's a chance that we'll see a hold for sure. I do not disagree with that at all. Personally, I'm dubious as to what will happen to the economy when they do cut the rates, because that tends to make inflation spike. PCE is oh shoot, you would ask me that, Brenda. I can't remember. It's consumer expenditure. All right, there it is. Let's go look. My 9,000 different what is PCE? So personal consumption expenditures. So there you go. So measure of prices people in the US pay for goods and services. So it is very similar to CPI, which is Consumer Price Index. Um, so it's just that, yeah, the Fed usually looks at PCE as opposed to CPI, although I'm sure they're looking at all of them. Yeah, Brandon, I don't know him either. I definitely say that in jest, as I'm sure you do as well. So anyway, yeah, I don't have my sarcasm sign with me today. Sorry. Anyway, so let's move forward. So yeah, so I mean, it's I love what Brandon says since he's here is it works until it doesn't, right? So that's one of those things you just kind of have to it's you've heard me talk about this before. I learned it from Ryan Litchfield. He calls it dancing with the gorilla, where no matter what you're doing with the market, you might think you're leading, but you're not. It's kind of like if you dance with a gorilla, you might think you're leading that dance, but you're not. And if you take the wrong step, the gorilla will remind you that you're not. And the gorilla is the market. The 800-pound gorilla in the room is definitely the market. So we kind of just need to flow with it, go with it, let it do its thing, and don't necessarily, we have our expectations. We can plan for those expectations, but we also need to have um, um, plans for other things. We need to have as many, and I can't think of the word to save my life. My brain just went boop. Uh, 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 but we need to have as many different ways to go at something when it doesn't go our way or does something a little different. Okay, there you go. Brandon says Forex Factory defines PCE well. So you guys can go check that out. So let's take a look at the VIX, which I like to look at because it shows how hard it is to be a seller. Um, it's the same with as with the market. It is what it is. I don't think my belief is that it's not as connected to the SPX and the general market as it used to be, but it is still a really good indication. And of course, it is when SPX goes up, VIX goes down most of the time, and that disconnection you can see sometimes when they go in the same direction for no apparent reason. So, but you see that it gives you kind of just an indication of what you can expect to be able to do easily. And when it's down here, you can expect to be a buyer really easily. When it's up here, you can expect to be in a whole lot of hurt no matter what you're doing, because this is just too much. But I like green, because I'm a buyer and a seller. I do scalp buys. I do diagonals. I do iron condors, covered calls and naked puts and all that. So as a seller, I prefer it to be up in here. I like middle to upper third myself. If it's in the lower third of this green, it's okay. It's good enough. When you start to get down into the lower quadrant here in the yellow, it's tough to find good premium regularly. It's still out there. It's just you got to work a little harder. So there you go. And that's what we're seeing right here with the move up in SPX, got to move down in VIX. So you play the cards you're dealt, correct? And it's okay to fold every once in a while. All right, so let's move on now that we've got a review, and as people are doing with Brenda and Brandon and others, throw those comments in there. Let's hear what everybody's. I love participation, so let's see what we've got. So today's topic, Who Are You? One of my favorite albums. Who are you as a trader? So it's something you want to determine for yourself because everybody's different, nobody's the same. But I want to talk today a little bit about how to determine that for yourself. And it moves. I remember when I first started, I've said this before, somebody said the word scalp, I'd break out in hives, and now I love it. So, you morph as a person, you go through your journey and change as a trader, and things that were once uncomfortable are not so much as you move along your way. Some things that worked really, really well stop working. So you have to kind of adjust, dance with that gorilla, right? So how do you trade? So I break this into a primary influence, a secondary influence, a tertiary influence, and then others, So for me, obviously, how I trade is my primary influence is Rob. I'm a Fibonacci trader. I love Fibonacci's. I've been using more Bollinger Bands with some stuff I'm doing, but that's very similar. It's all built around statistical analysis and standard deviations. So that's how you build your expectations, right? See, that's the word of the day is expectation. My secondary influence is definitely Ryan Litchfield. When I started, Ryan was my primary and Rob was my secondary, and it kind of at some point it flipped. But I've followed both of them and learned a lot from both of them along my way. Those are really the biggest influences in me as a trader. And then it wouldn't be fair without mentioning Amelia because she's been a real influence on me as a trader, especially over the last 3 or 4 years. And then, not to be forgotten as well, are all of the others like Brandon and Tony and Inner Circle. For those of you not familiar with Inner Circle, it's a mastermind group, and we influence one another and help each other become better traders. And this is not the only trading education that I've ever had. It's the best, in my opinion, but I've done other things as well, and I have learned bits and pieces. And it's kind of like you'll hear others as well as myself say, I will go to educational sessions about stuff that I already feel really comfortable with. I'm not going to ever think that I know it all, but I might be really close, you know. So, but I'm still going to go to a session about Fibonacci because I'm going to pick up a nugget. And if you go into it knowing that you're going to pick up a nugget, you will. And that's what it's all about. Once you get to a certain point, you still want to keep going with the things you know really well and stay engaged with others because they might have figured something out new for themselves and be sharing it. You don't want to miss that, right? So, for those major influences, obviously with Rob, it's about Fibonacci, it's about moving averages. That's the core to what we're doing. If you want to learn more about that, that's all. That's what Pop's all about. And then with Ryan, it's about mindset. It's about checklists or dossier, whatever you want to call it. What Rob calls learning how a stock eats and drinks, how it breathes, and also journaling and record keeping. He's taught me a lot about that. And then with Amelia, it's scalping. She's the one that got me scalping, but it's also about that mindset and mastermind in that realm of the group being greater than the sum of its parts. And that's what a mastermind is about. So, and then as far as other influences go, of course, Brandon, the futures master, and I use a lot of RSI that I did not used to use. Um, I don't use some of the indicators that Rob uses. I use RSI for my momentum indicator mostly. I use it a lot in my directional trading, in my scalps and whatnot. It's been very helpful. And then of course, Tony's a pattern whisperer. If you have not learned from Tony, you're missing out. He is so good at that stuff. And then with Inner Circle, being in that chat room in the lab for Monday, Tuesday, and Friday. There you go. Kevin Harrigan says, I use RSI. Thank you, Brandon. Exactly. Uh, okay. I'm not sure what that means, Brenda. Um, but the RSI. Um, yeah, I use the 40 and 60 that I learned from Brandon, and he does a lot of that in his E-mini think tank too. So those are that's me. So maybe that'll give you a little bit of a framework to write it down, type it in, and determine for yourself what are your influences and why. How did they influence? What did you learn from them? Just so that you know it's a nice little exercise to figure out you as a trader, right? So now we've got the influences. What about the old clock? When do you trade? So, you've got when do you do your preparation? You got pre-market futures trading. You've got your market open at 9:30, power hour, which is you draw a box around the movement between 9:30 and 10:30 and look for a breakout out of that box. You've got lunchtime where things kind of calm down. Maybe that's a good place to trade. I've seen some really effective scalps during lunchtime, but most of the time it's a little bit less active. Morning seems to be the most active, but then sometimes it'll pick up in the afternoon. And then of course we've got our SPX iron condors in the afternoons as well. So there's a lot of stuff going into the market close. And then, are you doing anything in the evenings, maybe? Because futures is trading all the time. You've only got about an hour in the day where there's no futures trading available. Now, you want to be careful in some of those times because there's less volume in those times and it gets a little trickier. But you can find some really good, if you're an insomniac, you might be able to find some really good opportunities at 3 o'clock in the morning when the European market opens, right? So, um, just one of those things you want to figure out. Like for me, I'm doing market open and I'm usually done by 11. The only thing I'm doing in the afternoons is the SPX cash flow, and I might be then I take that time to do management of things I'm in that are longer term, like my covered calls and my diagonals. And then on Friday afternoons, I'm looking to exit positions that are ready to exit and possibly enter other positions that are ready to enter in that same realm of covered calls, naked puts, diagonals, and the Rut Iron Condor, which is really tough right now. So yeah, that's kind of what I'm doing. So maybe you want to figure out what you're doing and what works for you. You know, if you got a job, maybe you can't do some of this stuff. Maybe you need to do more planning at night, jump in at the morning and see what's happening. Put in your limit orders with your targets and your stops, and just kind of let it go. Maybe check things out at lunchtime. Maybe look for a scalp at lunchtime, but be willing to understand that you might not find it. As you've heard Rob's stories about that was the only time he could trade when he first started. So he was going to do a trade no matter what. And that doesn't always work out best, right? So figure that out for yourself. And then, of course, we've got all the umpteen different types of instruments that you can trade. So, what do you trade? So, obviously there's equities. Within those equities, you got stocks, you've got ETFs, you've got indexes, to work with. We do a lot of option stuff here. We do some equity stuff, but a lot of option stuff here. We do a lot of futures stuff here. And not to be forgotten, options on futures, which Brandon does in his Wealth with Spreads. So we've got a lot of different things. There's Forex, which we don't do a lot of Forex, but you can trade currency and currency pairs in futures. So it's kind of a different way to go at it. And then obviously the old crypto. And there's lots out there to do with that. You don't have to just trade cryptocurrency on coin, Bitcoin on coin or Ethereum on coin. There are a growing number of ETFs that are built on either one or multiple cryptocurrencies. And so you can do it with options or with equities and still get exposure to that crypto. So lots of different ways. And obviously there's something else. There's bonds, real estate liens. There's all kinds of stuff you can get into. But these are the ones that really we're focusing on here. And you want to try and do a little bit of each of them as you can. As you hear me say umpteen thousand times, right? Find one thing and master it. And then once you've mastered it, find another thing, master that. As you start to build that toolbox, you'll start to do all of the different types of equities and options on the different types of equities, and then maybe some futures and maybe some options on futures and maybe some crypto ETFs or a crypto a Bitcoin future contract. So you can get into a lot of this stuff through all the things that we're doing, and it's a good way to diversify how you're trading. It's not true diversification, because true diversification, you need to be in completely different assets. And really the market is one or two asset groups of the multiples that are out there. But even within that realm, you still want to be diversified. You don't want to be too heavy into equities. You don't want to be too heavy into a specific sector like technology or healthcare. You don't want to have all your money in IBIT, ETF on Bitcoin, so you want to spread it around and diversify, because that's a nice way to mitigate your risks. So now that we know what you're trading and why you're trading and how you're trading, how long do you trade? So there's a lot of different realms to this, and you hear me talk about scalping. Scalping is seconds to minutes. I think the longest scalp I've ever been, I was in a scalp, I called it the sphincter trade because I was in a NVIDIA scalp that lasted like 37 minutes or something. It was real, and that's really long for a scalp. Scalps are usually somewhere in the realm of 5 to 8 minutes. Um, There you go. Been in one of those before, Brandon. So yeah, you just when you're expecting it to be really quick and it's not, it gets really uncomfortable, but that happens. That's life, right? So you just deal with it. Brenda is asking for new students, what is the safest crypto to invest in? I'm not sure there, I think safe crypto is an oxymoron, but that's because it's extremely volatile. That doesn't mean it's not also extremely profitable. So that's one of those things. That's part of what this type presentation is about, is to help you with some frameworks to lay out what you're doing and figure out for yourself, because that's what you have to do. We want to help as much as we can. The most regulated crypto. I don't do a lot of crypto, so I do not know the answer to that. I would say I don't know that any of them are very regulated, if regulated at all. There's a lot of them out there that's it's the wild wild west, right? Um, but I mean, if you want to talk about quote safe, and that is a very objective term, excuse me, subjective term. Um, Bitcoin's been around the longest. Ethereum's been around for a long, long time. Um, um, what's the other one? XRP. I forget what you call it. But those are probably Ripple. There you go. Thanks, Brandon. Ripple. So you got Bitcoin, Ethereum, and Ripple. Those are the ones you hear the most about. Those are the ones that have been around the longest. It's the flash in the pan that's going to take all your money, right? So if it's been around for a long time, it's probably a little bit safer. So yeah, there you go. BTC, ETH. Um, I think Ripple is XRP. So and then you can find those in the futures market. You can find those in ETFs, in the equities market. And that's probably your best place to at least start looking around and learning about it. But and it's, maybe you start with scalps because you're not in it that long, so your exposure's not that bad, not that big. But what I'm really getting at is figuring out, part of you as a trader is what is your style, which is some of what we're talking about now, and what is your risk profile. And your risk profile to some degree has to do with how long you're in it. Because as a scalper, my risk profile is much smaller because I'm not in it for days. Um, but also, as a scalper, I'm probably in more volatile things, so that makes my risk profile go up. So, it's one of those things you just want to figure out for yourself. A lot of people day trade, which is minutes to hours. Basically, it's in and out in the same trading day is the definition of a day trade. So, what you're doing, scalper is right there, seconds to minutes. We've got a trade that we built in Inner Circle in the lab. And it's called a Hakanashi scalp, and those last anywhere from 3 minutes to probably 8 minutes, 12 minutes, 13 minutes. We'll use fib numbers, right? Once you start getting past about 15 minutes, yeah, that's a very long scalp. It still can be a scalp, but and it's I know Trader Will does some stuff where his scalps he'll scale out of a big bunch of it, and then he'll leave a contract or two as a day trade. So his scalp becomes a day trade and it lasts longer. So it's not like it's some box that you have to stay in. It's a continuum, and you can have a trade as long as you're following your rules and following your trade plan, and you have this all laid out ahead of time. You can have something that you're into, and then you're out of a bunch of it really, really fast, and you hold a little bit of it longer, and maybe you hold one contract for even longer into the swing trade realm where you're talking about multiple days up through multiple weeks. That's more of what pop is built around. But for this year, so much of pop has been day trades just because of that's what the market's doing. But the swing trades are starting to come back. And then you've got position trading, which you don't hear a lot of people talk about that much anymore, which is weeks to months. It's not quite investing. I did not put investing on here because I don't consider investing trading. I think those two words are different. But investing is much more of a Warren Buffett style thing where you're in something for years. You love the company because and you find a company that's a really good deal and has a lot going on. Another one that I just wanted to throw in here, event-driven trading, and that isn't necessarily about how long you're in it, but more why you get into it. But a lot of times those are pretty quick. They're more scalps and day trades, but who knows? And then there's other stuff out there. Like I said, you've got investments that are much more long term. You've got your 401ks and your IRAs and your market funds, your mutual funds, a lot of different things. You might have some bonds, some actual bonds, as opposed to ETFs that are based on bonds. So there's a lot of other stuff that you can do, but that's more about what you're trading. But usually when you're trading things like that, it's much longer term. A 401k is retirement. A IRA is retirement. Mutual funds are used a lot for retirement. You've got your percentages between stocks and bonds for your retirement. So those are all much more about investing long term. So that all of this put together to kind of help you understand where you are as a trader and maybe make some decisions of where you want to go as a trader. And I threw this in of my own accord, but coming up in a few more weeks, September 8th through the 12th is Mastermind Week here at Wealth Builders. And here's the link for it. You can find it on the web page. It's on the calendar. So the easiest thing that I remember to do is go to the calendar and find it and click on that calendar entry, and it'll take you to this page. And there's a lot more information on this page. I didn't want to share all of it, spend a whole bunch of time advertising for it, but I wanted to let you know that it's out there because this is where you figure out where you are as a trader. You start off as a student, you begin to learn to trade. Maybe you get into trading which is the first level of mastermind, and you learn a lot of cool stuff. Maybe then you work your way up to the mastermind group, which is the next level of mastermind, where we meet every Tuesday and we've got mentor sessions and lots of educational stuff, and you up your level of trading. And then maybe from that, you move into inner circle, which is our highest level mastermind, which is where we have quarterly meetings that last a whole day. We've got our monthly meetings that last a couple of hours. And then we've got our lab, which is every Monday, Tuesday, and Friday morning from 9 to 11. So there's different levels. And as you move up that scale, you will watch your trading improve. And then, if you really want to go, the thing, I was a pretty good trader in Inner Circle. Inner Circle helped me a lot. But the thing that made the next step up in my trading was doing this, teaching. So, something to think about, maybe. Some of the things that we talk about in these mastermind groups, we have sessions on evaluating ourselves as traders. And these are some of the things we talk about when we're doing those evaluations. You know, what's your purpose? What's your types and time frames, like we just talked about? What's your risk profile, your frequency, scalper, day trader, swing trader? What are you trading? You got to look at, you know, find your brokerage account, your trading platform, make sure you've got a business plan, as well as I call it I call your overall trading plan, and then your trade execution plans, or your SCS, your strategy creation system, or as I got from Amelia, your recipe card. You know, and that's for each trade setup. Make sure you're journaling, and always, you know, this presentation is actually called trader reevaluation, because that's what you're doing. You evaluate yourself. You don't evaluate yourself one time and just walk away. You're reviewing that and reevaluating yourself as you go along your journey. You want to do this regularly. You know, I would say at least annually, but you know, whatever works for you. And then, of course, we talk a lot about trading psychology, like we've talked about in here. How do you deal with emotions while trading? You know, fear versus greed, and mitigation techniques like meditation and breath work and journaling and tapping and all the things we've talked about in here before. And again, review and adapt, rinse and repeat, right? And we also talk about trade plans, where we're talking about, you know, what's your why, what's your availability, what's your capital, your markets, you know, what kind of strategies do you like, setups do you like, what's your reward to risk ratio, education, all that stuff. Your recipe cards, your SCS, plan, do, document, review, repeat. So it kind of gives you another framework around your trading. And then, of course, we've talked a lot about journals in there. What, how, when, and why. You know, you want a format that fits you. Oops, wrong button. Um, you want to at least keep your data. You know, the bare minimum, you want to write down, type in, however you want to do it. You want to keep your data. But for me, I'm really big on other things, like reasons, like other information. Did I sleep well? Have I done my movement and my exercise for today and for the last several days? Where's my nutrition? Where's my water? Good segue. Make sure your nutrition is good. Make sure your hydration is good. um, you know, physical, mental, and anything useful during a review. Maybe you have a trade that went against you. That doesn't make it a bad trade. It only makes it a bad trade if you didn't follow your plan and you didn't learn anything from it. So that's where you want to make these observations, and maybe a trade went against you and you kind of followed your plan but not completely, because you were distracted by something going on in your life, or you were tired, or, you know, anything. So it's just another one of those things that journaling, the more information you can gather, the more you have for your regular review. And it's just, I think I don't know if I've talked about it in here. I've talked about it before. I see a journal as my chart, the chart of me as a trader. So I review that chart and I look for patterns, and try and figure out, okay, what causes the good patterns and how can I continue that and improve on that, and what causes the not so good patterns and how can I deal with that and minimize that. We also talk a lot about self-development that we've talked about in here, I believe, you know, personal development, trading development, your motivations, your emotions, your beliefs, semantics. You know, I'm really big on semantics. And I'm always trying to give resources to everybody, kind of like I did last week and in the first one we did on habits and routines, to help you further go down whatever rabbit hole you want to go down, because we don't have enough time in here to do all of that, right? And we definitely talk a lot about mindset, and that's semantics is big for my mindset. Figuring out what's your beliefs and your feelings, fixed versus growth, or as I like to call it, scarcity versus abundance. So if you have a scarcity mindset, it's not always going to serve you well as a trader. If you have an abundance mindset, it probably will serve you really well as a trader and just in general. But again, with your mindset, as with everything, awareness is your first step. You go to any 12-step meeting, and the first step is you realize you have a problem. So, just understand that you make those realizations. Habits and routines, like we talked about several months ago. And it's always a work in progress. Realize that you're not ever going to be perfect. You don't even want to try to be perfect. You just want to try to be better and keep your journey going. Don't ever quit, right? Jimmy V, never quit. And again, these are recycled slides to some degree, and I always try and put resources out there for people I follow, books that I've read, things that have been helpful. And again, habits and routines, putting together your habits, having those routines, morning, evening, nutrition, exercise, energy, spiritual, organizational, whatever. So, anybody got any questions about what we've talked about up to this point? I hope it's been some good information. Some of it's been very general, some of it's been a little bit more specific, give you some frameworks that hopefully you can use to make yourself figure out where you are as a trader and then use that to improve as a trader, right? So, while everybody's typing in their 13 questions, all right. Thank you, Kevin. And of course, we've got the idea that trading success is tied to finding some specific ideal approach is misguided. There is no single correct methodology, which is kind of the crux of everything that I wanted to put together in this presentation. Find you, because you are unique. We're all unique. So find you as a trader and figure out what that, and it can be a little piece of this from Rob, and a little piece of this from Brandon, and a little piece of this from maybe me, and Tony and Amelia and Ryan and others. Do you have a group? So yeah, just pick those parts out and put together that assemble that machine that is you as a trader, right? All right. Yeah, Barry, the Russell is yeah. And that's exactly what I was talking about, Barry. The Iron Condor on the Russell has just gotten to be tough. And the other thing is the market makers are not helping us because there's not any call strikes within our criteria. For the most part, they're using $50 increments. So we're not going to do that. And then when you get into the $10 increments, we're into the 20s and 30s in the delta, which is way too high. So the whole thing is just a mess. And I think it's because of the big pop up. So with that, how about we go to the charts? We'll spend the rest of our time doing a little bit of that. If you've got any candidates you would like for me to look at, we can certainly do that. And there's the old disclaimer one last time before we end. And let's take a quick look at exactly what Barry is talking about. Oop, wrong one. We want this one and this one. And there you go. There's the Russell. And it's kind of doing the same thing as the S&P. We'll start at Tariff Central over here. And you see this big move down, and that makes puts difficult. And you see this big move up and then a gap and run, and that makes calls difficult because um the market makers can't keep up because they're trying to mitigate their own risks. That's their job. And it gets very hard when you get these big pops. So maybe it'll stay, when it's kind of meandering along, it's okay. It's when you get these big pops that it becomes tougher. But the Russell has just, for the last year plus, it's become tougher and tougher and tougher every week. So we have moments where it's okay, but many more moments when it's not very easy. So, all right, let's pop back over to Omega Charts and we'll open tab 2. And Brenda, surprise, surprise. Well, I already typed in the cues, so we'll look at the cues first. So not to be, got some chart maintenance to do this weekend. Not to be surprised, it looks just like everything else. So we'll start to zoom in a little bit on this. So there's our fib. We're getting up close to maybe time to look to redraw. I'm going to pull this out a little bit. And as you can see, again, the NASDAQ also had a new all-time high on Wednesday. So obviously the Qs will as well. The Qs came down and didn't make it back up. So it's a little bit different with my candles, as I've talked about before. The color is where it finished relative to the day before. So like this one is red because this close is lower than the previous close, but it's open because for the day it started at the bottom and moved to the top. Just like this one is green because it closed higher than the other one, but it's filled in because it started at the top and moved down. So something I learned from Ryan years ago that I find very useful because it's more information at a glance. But as for trading the cues, we're right there. Actually, let's do something a little different. Let's go over here and let's take a look at the cues. And there we go. Let's zoom in. So same chart, same fib. We've got today's candle on there. So today we kind of just took a big old trip down the road with a lot of things today. Actually, let's do this. Let's look at the morning screen, which is 5-minute charts of everything. This is what I look at first thing in the morning. And if we go over here and look at this cues again, you can see where it gapped up and then just went blah and just can't get back up to where it was. Smaller candles. We're getting into lunch. That's to be expected. But as far as trading it, we are down here kind of in the middle of nowhere. So yesterday was a good trade. The day before was a good trade. Today it's a little tougher as from a daily chart. From a 5-minute chart though, we're kind of putting in a little base right here. So I don't know. Does that give us some support? It certainly looks like it does. Maybe a little bit more right back here. Definitely some back here. So those are kind of your main levels. You're even though you had a down day, you still got kind of an upward trend. Let's make yeah. So here we go from Tuesday. I mean, looks like an upward trend to me. What do you guys think, guys and gals? So probably, and it's staying above the averages. So it's a bullish bias. So we want to be careful that we're not doing bearish trades against the bias unless we really, really know what we're doing and we really, really know a lot about whatever that instrument is. And even then, you want to probably be aggressive with your contracts, which is less. But yeah, so Q's might be let's hang out and see. Oh, that's diamonds. Get me. There we go. So I just rambled on about the diamonds, not paying attention to what I'm doing, but that's still an uptrend. It's just not as steep. We've definitely got, sorry about that. We've definitely got we've got a similar activity. We're putting in a little base right here. We've got one here, you know, but the it's shrinking, right? You got big candles and then it's shrinking, and you're getting smaller and smaller candles. You know, do you have a little bit of a base right here, even though these kind of got outside of it with the trend down? Maybe a nice wedge triangle. It's descending, but when's it going to pop? Because we're up above the averages. Is it starting to pop now? Is it going to pop up? So this is one of those where you kind of got to be very agile about it. Let's take a look at the SPY that Brenda also asked about. So again, we've got that upward trend, but we're really flat for how many days? 3 days now. Look at that. We had a good day on Tuesday, and then it's just been sideways. But look at where that is. That's there. That's there. We've got a wick underneath it. That's there. That looks like some support right there to me. But is it, are all the orders getting gobbled up here? And if it moves down, it's going to fall through. It's got a long ways to go. Maybe. 1, 2, 3, 4. So trends and channels tend to go 3 to 5 times. We're on number 4. So maybe we hit it again and then fail. Maybe we hit it again and bounce big and go away from it. There's a lot of different ways this could play out. But again, let's take a look at the daily. Back to the daily, what we're seeing, I meant to do an update. I should have just done an update. Let's go back to, let's just do it here. This is easier. So here, we're kind of in the middle of nowhere. We're getting up on that -618 fib. So that's where the Fibonacci effectiveness starts to degrade. If we really zoom in, we're almost literally right in between those two fib lines. So for right now, it's still bullish. It's moving bearish. We don't have a great position between Fibonacci's. Maybe time to hang out and watch, or go find something else. So, and then let's do BTC. Okay, now this is a Bitcoin mining ETF. Brenda, did you want this ETF or did you want Bitcoin future? Okay, so again, moving up, which is definitely par for the course for Bitcoin and all things crypto. Well, not all things, the big dogs. Um, Real gappy right there. Gappy right there. So, but that's kind of the volatility. Lots of strength in the RSI, that's for sure. Look at that. It's pretty much staying above 50, and it's definitely staying above 60 in a lot of places. So that's a lot of strength. Let's take a look at, I don't trade this particular one, but let's see. What do we have here? I mean, I think that's the biggest move. A little bigger than this one right here. So let's do that. And let's zoom in on it. And well, we're in a pretty good position. We're sitting right on that 136 minus 136 fib line. Let me dip over here real quick. Look at the daily. So we're looking at an ATR of about 6.2. So actually, we don't need our fibbits. So that puts us in the middle of nowhere. But we're seeing a lot of respect. So it could be that those fibbits can serve us or not. Let's put them back. Let's take that one. We'll leave that one out. Put this one back because it hits it. Look, it hits it there and there and there and there and there. So it definitely sees it, even though it's not quite, we don't really need it. The one thing I don't like about it is it's between its averages right there. I don't like it when it gets squeezed in between its averages, especially multiple candles. So, but that could be room for a pop. And we're right there on that fib. We're right there at the 21 moving average. So we could see a pop. We could see a move up from that. So this is a switchback. The move up is actually going to be dampened by the 8. So the move down is a better move. That's $2, two and a quarter dollars. That's two and a quarter ish. So it's going to be tougher to make a whole lot of money off of that, but the move is definitely there. So you want to see a bounce off of this. Let's go back to the 5-minute and look at where we are. And we've been hanging out down there today. So big gap down overnight and then just hanging out. So maybe we wait, make a move and see what it's going to do. But yeah, that's a tougher one to trade. But the switchback move is definitely there. So you definitely want to look at that as your probability. Again, our RSI is kind of in the middle there, so we want to be careful. But a bounce off, maybe get above that 8 and keep going. That could be a really nice entry. If it does dip down below that, come back and retest that fib. That could be a really nice move to the downside. And you got your moving averages that you can use for kind of your stops. But like I say, the targets they're pretty close, so you're not going to make a ton, but the move is definitely there. If you do a lot of contracts though, don't you, Brenda? So that could work in your favor. So I'm not seeing any other candidates out there, but definitely these are some of my favorites for let's do, as you can see on here. Oh, that's not what I wanted. Hold on just a second. I'll put this back at the 5-minute. This is what I look at a lot, especially for my my scalps. And I'll give you a sneak peek at my morning scalp screen. And there it is: SPYs, Qs, IWM, and diamonds. Those are the ones I'm looking at, because more than anything, that's where we started with this, because it's so easy to do a lot of different strategies and setups on ETFs because they give you kind of some built-in security with a little bit of diversity. You kind of diversified yourself by default because you're in the market as opposed to a specific equity. So anyway, it's 1 o'clock, so we'll let Andrew get along with what he needs to do for the rest of today and call it a day. Thanks everybody for coming out, and trade disciplined out there.